Welcome to this week's look at the state of the New York City real estate market. This is the report for the week of April 14th to the 20th. So we are well into the spring market and there is a lot going on. So be sure you stick around for this whole report. At the end, I always share additional information with you as well as strategies for success. We're going to get started now with the luxury market. There were 33 contracts signed for properties priced at $4 million and above. That is 4 more than the previous week. The number one contract was apartment 2N at 140 Jane Street. It was asking just under $20 million. It was raised from $19.35 million when the building began marketing off of floor plans back in September. This condo has just under 4,600 square feet. It includes 4 bedrooms, 4.5 bathrooms, plus a conservatory with a stone floor and sliding glass doors that open onto a Juliet balcony. A 33 by 15 foot great room with almost 10-foot ceilings faces the Hudson River. The primary suite has 2 dressing rooms, and this 11-story building was designed by BKSK Architects and Leroy Street Studio. 10 of the 14 units have sold with an average asking price of $5,301 a square foot. The amenities include a doorman, porte cochere, automated parking garage, lounge, fitness room, lap pool, and hot tub. The number 2 contract was a townhouse at 280 West 11th Street. It was asking just under $14 million. It was reduced from just under $18 million when it was first listed back in September of 2020. This is a 6-story, 26-foot wide house. It has a little over 7,900 square feet and 8 fireplaces. So this house has been divided into 5 apartments. It is on Bleecker Gardens. It is one of 14 houses that share a common landscaped garden. The annual real estate taxes are $100,946. Total weekly asking price sales volume $232,214,000. Average asking price $7,036,788. Median asking price $6,372,500. Average discount from original ask to last asking price 9%. Average days on the market 435. So again, nice showing in the luxury market despite all the turbulence that's going on in the world. The luxury market in Manhattan continues to perform nicely. We're going to take a look now at what is going on in Manhattan. However, if you have any questions about the luxury market, please post those below. The new supply for the week, 319. That is down about 33% from the previous week. Contracts signed up almost 14%, 243. Off-market properties rose as well for the week at almost 11%. At 155. The supply for the month in Manhattan fell almost 6%, 1,872 properties. Contracts signed 1,075, that is up a little over 4% for the month. And off-market properties rose over 74%, 577. The market pulse is up 1% from last month, up 2.1% from last year. You can see from the chart that we're kind of up in the upper end of a neutral market. Essentially, this is that balance between supply and demand. The demand is remaining quite strong, and the supply is not quite keeping up with that. The liquidity pace chart, this 30-day moving window of contract activity, is showing that we are up about 1.5% from last month and up almost 10% from last year at 1,075. That's it for our look at Manhattan for the week. We're going to shift over now, take a look at Brooklyn, which is a slightly different story. And then be sure you stick around until the end of this report. I'll share some additional information with you about mortgage rates and kind of more granular details about what's going on in the Manhattan and Brooklyn market. And as always, I'll share my strategies for success. The Weekly supply for Brooklyn fell almost 23%, 161. Contracts signed 128. That is down a little bit less than a percent for the week. Off-market properties rose to about 11% at 61. Supply 943 for the month, and that is down about 6%. Contracts signed 557. That's down about 2.5%. Off-market rose almost 23% at 255. Market pulse in Brooklyn, as you will see, we are down about 2.2%, a little less than a percent from last month, a little slightly more than a percent from last year. This chart is showing something kind of the opposite of what the Manhattan market was showing us. Yes, neutral market for all intents and purposes. However, the demand is really not as strong in Brooklyn. The inventory is also a bit sluggish, but compared to the demand, it is stronger. So it looks like we're kind of sliding down a little bit, not really into buyer's market territory, but overall we're seeing something a little less robust in Brooklyn. The liquidity pace chart for the month, 557 contracts were signed in the last 30 days. That's showing we're down almost 6% for the month and about the same from last year. So that's it for Brooklyn. Any questions about Brooklyn or Manhattan or the luxury market, remember to post those below. You can always reach out to me as well directly at Sotheby's. So now I'm going to give you the wrap up as well as share some additional information with you. There were 33 contracts signed in the luxury market. That's 4 more than the previous week. 3 of those were in the trophy category, meaning properties that are priced at $10 million and above. 19 were condos, 9 were co-ops, 2 were condups, and 3 were townhouses. The majority of these contracts were uptown, 21 versus 12 contracts in the downtown market. So despite the macroeconomic volatility, the luxury market continues to be very strong. In Manhattan and Brooklyn, we continue to see a neutral market in each. Manhattan is showing more strength than in Brooklyn. The supply in Manhattan is 6,841, Brooklyn 3,321. Pending sales in Manhattan 3,244, in Brooklyn 1,938, off-market 3,513, Brooklyn 1,743. Average days on market 89 in Manhattan and 60 in Brooklyn. And the liquidity pace, this 30-day moving window of signed contracts, Manhattan 1,075 and in Brooklyn 557. So, as I said, Manhattan, despite the volatility, is just holding a little steadier. The weekly contracts are up from last week, and it perhaps is showing that the buyer demand continues to be relatively strong despite all the volatility that's going on around us. Many of today's deals, however, were signed before the volatility, so we'll need to see in the coming weeks whether that demand on the part of the buyers continues. The Brooklyn market is kind of going sideways. Supply and demand essentially flat. This measurement is for the same period of time as Manhattan, so this could just be factors going on in Brooklyn, because in Manhattan we see that things are moving right along. That hasn't always been the case. Often it's been Brooklyn that's been leading the charge, but we'll continue to keep an eye and see how the coming weeks treat the market, but we'll continue to keep an eye on all of this. We've seen the rates go up over the last couple of weeks. They seem to be kind of leveling out now, but that's likely going to have an impact on buyers, especially buyers certainly below 4 million, but really even more for those buyers at 2 million and below. A lot of the deals above that are all cash, so the mortgage rates aren't really having such a big impact on those buyers. So taking a look at how these markets are performing in terms of property type and size of the property, meaning bedroom count, the studios and 2 bedrooms in Manhattan led the co-op sector over the last month, while the 4 bedrooms lagged. In the condo market, the 1 and 4 bedrooms really stood out as the outperformers. And year over year, while most categories were up, the deal activity really varies widely by property type and bedroom count. With the macroeconomic landscape, it remains choppy. It is helpful to sellers, even buyers, so they have an understanding of what their general competition is. But certainly to sellers, this is very important information. In Brooklyn, studio and 4-bedroom condos showed big year-over-year gains, but the total volume in Brooklyn was low. The 1 to 3 bedrooms, you could think of that as Brooklyn's core market, those were down from last year. So interesting that the co-op market showed a bit of strength, a bit more strength than the condo market, especially among the 1 bedrooms, and that was likely helped by the lower interest rates back in March. It is a good reminder to all of us that the local dynamics vary quite a lot. The market behavior can also vary quite a lot. It differs, and that is often reflected between the differences in the segments. So what does all this mean? Well, if you are a seller, you can see that market conditions are neutral. You can also see that the buyer demand varies based on property type and number of bedrooms. In a neutral market, there is only one way to price, and that is to keep your asking price in alignment with the market. You will know in the first 30 to 60 days of being on the market if your strategy is working, keeping in mind that more time on the market equals less money in your pocket. Also, be aware that you have new competition coming on the market every day. New properties make the properties that are currently on the market look stale, so you don't want to be in the stale category. You want to be in the in-contract category. So just keep that in mind. You don't want to just be sitting around in this market when everyday buyers are seeing more options for them. So buyers, you do have some more choices. The mortgage rates are not fantastic, but they do seem to be holding fairly steady. If they work for you, then, waiting around isn't necessarily, we don't have any real predictions about rates going down. So you might not want to hold off for that, but it really depends. These rates would have to work for you if you're financing. When it comes to leverage, be aware that prices for the most part are holding pretty steady. You may get a little bit of a discount, but don't count on a huge discount because all the data that's coming in is showing that the negotiability may be there a little bit depending on how it's priced, but it's not huge. As I've said, though, that goes for these newer properties. If you are seeing a property that's been on the market for a while, you may get a little more play there. All right, that's it for this week's look at the state of the New York City real estate market. As always, my thanks to the Olshan Luxury Report and to Urban Digs. The work they do helps me to help you to make great decisions. I'll be back next week with the very latest news on what's happening in the New York City real estate market. In the meantime, take care.